Hello, Maverick Traders. Welcome back to your market roundup for May 17th, 2022. Corey Halliday here with you. As always, a quick reminder to make sure that you follow your trading plan. Markets are continuing to be volatile. Today, it was a surge back to the upside. We've created a little bit of a bottoming point. We talked about that at the end of last week in our weekend trading room, talking about this relief rally, this bounce back. And there's some interesting changes that are taking place. Some things like agriculture or soft commodities, where I think we can actually focus on them a little bit more to the downside. So, really robust rally. We started by gapping up, and then it just fed from there. S&P up almost 2%. NASDAQ, Russell 2000 up almost 3. Oil down sharply, gold slightly lower. So, did we create a little bit of an intermediate low in markets? I think inflation has peaked. Now, that doesn't mean it's going to go crashing down, but it is going to back up in the next few months, in my view. So, from 8.5% annualized, it should back up now towards 6 and 5. And I think we're going to talk about some of those sectors that might be hit by some of that rotation within sectors where money's flowing out of them and into other groups. Another area where you might see that would be in consumer defensives, which had a really rough day. So a little bit of improvement. You can see there's now 4 to 1 above or below the 50-day moving average. Advancers to decliners strongly to the positive. Let's take a look at the charts. So here's ultimately the issue, I guess, for the markets. We always talk about support and resistance and key levels, and I'm not inclined to think of support and resistance as like a rigid, cement type of level. I think of it like a mattress you kind of squish into. So this could kind of squish in here a little further, and I'd expect it to, before we kind of trade to the downside. And I don't think we take out that low for a while. My best guess is that we stay above that low for the next couple of weeks. Now, that might surprise you, but I think we're in a little bit of a consolidative, corrective type of pattern to the upside. We've rallied so far this week, but I think there's a bit more before this thing's all said and done. As you look at the NASDAQ, similarly, but maybe we even have more room. We're a little further stretched, but I think, again, it's going to climb up there and kind of push into that zone and push into that area. And then we'll see once we get there. A little bit of a consolidation, but importantly, I think that low is probably established for the next couple of weeks. Now, as we look at the heat map, this is a telling sign. You can see the deep red in consumer defensive stocks, led by Walmart to the downside. Everything else pretty well in the green. Healthcare, which is another defensive group, traded poorly yesterday. Consumer defensive traded poorly today. But what does that tell you? It's kind of what's happening is a rotation out of the places that people were hiding out in. And remember that markets are a forward-looking mechanism. So this is always something that's very important for new traders to understand. The market is not trading based off of today's data. It's trading based off of what the future is likely to look like. And if inflation is backing up and enough people have become fearful and fund flows have gone crazy, well, it actually kind of makes sense when people are so nervous to rotate out of defensive and get a little bit more aggressive in your stance. And so tech with a huge outperformance versus some of these other groups. So it's a mini rotation at this point, but it could go further. I mean, I would look at some of these areas like the defensive consumer stocks, the Coca-Cola's, Procter's and Gamble's, Walmart's, Dollar General, Target, Costco. They should lag while the market's in a little bit of a bouncing period for a week or two. Maybe it'll be even worse than that, but at least in the very short term. So we came into this week with an upside expectation. We said, look, we're still in a bear market. Make no mistake, the long-term chart is down, but the short term, we should continue to bounce, and we're seeing that rally. I don't think, we talked about that this 20 would keep coming down, the price would come up to converge. I don't think it's just you go up for 3 or 4 days and then immediately collapse. That's not how I see it. I think we're going to stay here to a little higher for a couple of weeks, a little bit of a resting period. Look, as a marathon runner, as a sprinter, we sprinted to the downside. Okay, let's use that analogy. We just ran a race to the downside. We need a breather at this point, right? We need time to rest before we probably do go head back down there. But again, I think it's a process where we're consolidating. So last week probably highlighted the best trade idea all year for me, which was Twitter down here on the bearish side. I had Twitter. Now, I've traded Twitter a few different times. I traded Twitter neutral, and we had it right here for a few weeks, and it worked perfectly. Even while Elon Musk and this buyout, and it just kept going sideways, and the options were heavily priced, and then they just started to collapse. Because what normally happens in the buyout is you just kind of consolidate right underneath the buyout price, and then eventually the buyout happens and you kind of converge to that. So it was a great neutral candidate. Well, last week we put it down here. And I said, for me, I think the probability of this deal getting done now at this price is quite low. And you could put on these $5 put spreads for a buck, for less than a buck. I got mine on at like 90 cents. So for 90 cents of risk, I had 410 of reward, and the price has collapsed. And those things have tripled in value so far. You could take off plus some. If you wanted to keep in it, there's more than 4-to-1 reward to risk on a trade that I think had a better than 50% chance of paying out. So it was kind of, shocking to me how good those numbers look. And I tried to emphasize that point last week. I have to say this week, I don't see anything quite that compelling, but I was really excited, and I traded Twitter put spreads. I've taken some profits. Anyway, it was awesome. So let's get into some new ideas here. On the bull side, here's Electronic Arts, and this would not be a candidate for huge upside, but do I think that the low is established and that we can play it to be neutral to higher over the next period of time? I do. Some relative strength. It's back above its 20 and its 50, and I suspect it's gone from a bearish trend to consolidation first, and then I would expect in the months ahead for it to leave on the upside. So I'm going to give this one, more of a neutral to bullish, but you can make good profit on a neutral to bullish outlook. So EA is kind of interesting that way. FedEx, I'm a little bit more optimistic on this one, but again, I think after you see a big expanded range bullish candle like this, you'll usually back and fill a little. So if you're not in, I'd love to get in a little bit lower. FedEx is really kind of interesting in terms of fundamentals and some comparisons. If you get into fundamental analysis, this thing trades at like an 11 PE versus an S&P at 20. It has, a dividend yield higher than the S&P. It trades at a lower price to book, lower price to sell. It's got all these sorts of fundamental numbers, and I think it's in an industry where people are not going to get away from shipping boxes and materials around the world. So yes, Amazon has kind of gone their own way, and they're doing their own shipping and logistics for the most part, but I still see a pretty bright future as in terms of potential there for this business. So anyway, it's not so much the fundamentals as just a tradable opportunity, but I'd like to pick that up on a dip. Now, Oxy is one that we've highlighted. We highlighted it at 58. Now it's at 68. So it's up 10 points already. This is in the energy space. Energy stocks. There were a few weeks ago where I said energy to the upside and gold to the downside. And it was something that I traded, where I traded energy to the upside. I've bought two bullish positions, separate positions in Oxy. I had a bullish trade that was working. I added another one. I've had Chevron and some others that I've played to the upside. So I think this again is one that you could take some money off. I took off half and I still have half in, but continue to expect that to trade to the upside. For whatever reason, I found finding the bullish candidates a little bit more difficult. In some ways, They're tough to find a great looking chart where you say, oh, this just looks fantastic. But Oxy certainly fits the bill there in terms of its trend and momentum and all those good characteristics. Now, neutral. I've got Coinbase as a neutral. You can see the exhaustion low. Look at the explosion in volume. This was the largest volume that we've seen in the stock, with the exception of its IPO day. So it was massive. The turnover, the panic. There was even an article that came out that highlighted that Coinbase had to talk about what would happen in a bankruptcy. And that was part of what caused people to just panic sell. And it's interesting. I look at that as a buying opportunity on that day. And I'll tell you why. They have to reference this for SEC. They say, well, how will we handle a bankruptcy? Look, companies have to do that. And this is a financial company. So think of it like a bank or a broker. There are certain rules in place. Well, if you have a bank and they go bankrupt, what happens? Your money is insured, right? Up to a certain amount. If your money's at a brokerage firm and they go bankrupt, what happens? Well, your money to a certain amount, is insured. If you have your money in a crypto, which is what Coinbase is, brokerage or bank, what happens? It is not insured. So insured, insured, not insured. And that was the point of, hey, in a bankruptcy, here's what would happen. And you have to basically file that with the SEC. Well, the news took that and ran with it as if Coinbase was declaring bankruptcy, and that's not what was happening. But it was basically spelling out that, look, in a bankruptcy proceeding, your money's not insured like it is over here to a certain amount. It's not. Okay. When you're buying crypto, you are not in an insured account like these with your money. So there was some panic, but it's not I think people were panicking because they thought, well, my money's not safe and so on. And I bet you Coinbase had a little bit of a run on the bank, so to speak, in terms of their business. Certainly not good, but that tends to be how bottoms happen. And so I don't think there's necessarily a ton of upside, but that's probably setting the bottom for the stock. And now we're in kind of this choppy consolidation. The options market's still pricing in a massive amount of volatility, and I think it'll be relatively range bound. It's still going to be volatile, and there'll be some news events, but you could trade this to be in a 40-point range and still put on some interesting trades. Now, on the bearish side, these are a couple of stocks that I highlighted on the bullish side for many weeks. I remember having Archer Daniels Midland and Mosaic and some of those in here. I mean, for a few weeks in a row, we just kept talking about them. Kind of like I've been talking about Oxy the past few weeks and such. But if you look at this trade, I think it ran its course. Now, I tend to get out of a trend maybe too early. It's probably something that I tend to do, but I don't try to capture the end part of trends as much, because unless I think it's going to be this big blowaway move, if I see a surge like this and the volume gets kind of high, I kind of figure, hey, it's probably running out of gas. Now, it might go a little higher, but I can't pick every top and every bottom, and I can't predict everything. And maybe it'll give me this good signal to sell, and maybe it won't, So I'd rather take my money and run in a case where I think it's kind of creating an exhaustion, even if it goes a little higher. And I know that we kind of, well, I'll speak for myself. I went away from these as bullish candidates probably too early. I'm guessing I didn't highlight it at all on the bullish side in April, but I remember highlighting it back here in these months to the upside. Now, fast forward to today, the trend has reversed. You're coming up underneath these short-term moving averages, and I think we trade to the downside. I don't think the market, well, in order to profit, in a lot of ways, you have to have a differing view. If you think like everyone else, you'll get the same results as everyone else. You've got to think a little differently. And the way I see it is everyone's laser focused on inflation, the Fed's going to hike rates and it's going to be a disaster. And I go the other route and I say, what if, and I think this is a real possibility, what if it shocks and surprises people how quickly inflation drops and the Fed doesn't get that crazy and doesn't hike as many times as the market's pricing in? Yes, the Fed's going to hike, and yes, they're going to be hawkish, and there's going to be a 50 basis point hike coming up, and so on. But what if? And I think that's what the market's telling you is basically inflation has peaked and these things are not continuing to skyrocket. And I think the next trade is another leg lower. Same thesis here, same thesis in Mosaic. A fertilizer stock, Archer Daniels Midland, these are both in that ag space. Agricultural soft commodities, as they call them, corn, wheat, soy, etc. I think we have another leg to the downside here. I kind of prefer the ADM chart to the mosaic chart. This one needs to fail here, but either way, I think those should have another leg to the downside. And then last but not least, one that I had wrong in essence, in that for a while it was showing great relative strength. It hadn't traded below this low, even as high growth stocks were, cascading to the downside. And I thought this thing was going to stabilize and be actually a bullish candidate. Really, once this trend reversed and once you started to break out, I thought, oh, I'm going to trade this to the upside. We've got relative strength. And the last couple of weeks, it's come undone. Now, it was one of the last dominoes to fall. I thought that this was a really good sign of the market bottom, was the fact that Apple was kind of the final domino that broke, and it broke hard for a couple of days. I mentioned that in the weekend trading room, how Apple I felt like was the final domino. And if you line up the dominoes and the last one falls, there's no one left to sell, right? That was kind of the last forced panic selling liquidation. And from there, we've rallied sharply. Snowflake was holding out, but I think there might be something here. I'm nervous about Snowflake. It reports earnings next week, I believe. And I just wonder, who knows what? It just is not acting right. I suspect it's going to make another leg to the downside. So it's kind of even underperforming some of those high growth stocks, which it had outperformed for such a long time. So in my view, inflation has peaked. The stronger groups have rolled over, like the ags and the soft commodities and things that led to the upside. Now, it would also be a reason why I've taken some profits in energy. Energy has been phenomenal, but let's go back to a little differing view, and we've got to start considering the possibility that inflation's coming back down. And if that happens, these commodity names, including oil, should start to really back up in a meaningful way. So the next leg down could be a rotation where some of these groups that were very strong actually lead in some cases to the downside. Existing home sales on Thursday, and then on the earnings side, Applied Materials, Cisco, Deere, Lowe's, Palo Alto Network, Target, plenty of companies from a variety of different sectors. Hope you've enjoyed this market roundup. Have a great rest of your week, and we will see you next time.